Hello, everybody. Mini market update for you. So it feels like we're just constantly being bombarded with news and negative headlines. And our job is to try to help you filter through some of that and focus on the data, which might surprise me, it might surprise a lot of us. So what have we been hearing? I think the big ones are inflation is still hot, gas prices are up, food costs are up, home prices are up, rents are up. Now, mind you, a lot of that stuff is starting to come down, but it's very slow, unfortunately. The Fed did not raise rates in September, but they might raise rates again down the road. We shall see. Even though the Fed did not raise rates, the market is still dictating higher rates. So we're seeing now 30-year mortgages at almost 20-year highs. We've got, an ongoing war. We've got fires and disasters kind of going on everywhere. I think one of the big ones is that a lot of people are asking about, so we've got an election year coming up. How does that affect things? So, I wanted to kind of just weed through this and drill down to the data and say, yes, there's a lot of stuff going on. There's always a lot of stuff going on, but does it really matter historically? Okay, so I've got two charts on the screen. The top one is an S&P 500 heat map, and it's a daily heat map. So what it does, it goes back to 1950 and says, what did the S&P 500 average on each day? We've got the months at the top and the days of each month going down. And what I found out was kind of surprising, that the environment we're currently in is perfectly normal. It should not be a surprise. So, in the red box that I'm about to circle in blue, we've got the current 10-day stretch that we're in. And look, there's a lot of red. On average, this 10-day stretch that we're currently in isn't so great, okay? If it wasn't following the trend, I think that would be maybe alarming or very curious. But we're currently experiencing what we normally experience this time of year in the second half of September. No surprises there, okay? October tends to get a little bit better. And then for sure, November and December historically get much better. We expect that to play out. Obviously, we don't know. But if we continue to follow the trend we're on, things should be looking up from here, okay? Second chart on the bottom, and this is what I found very, very interesting, goes back and looks at the S&P 500 in every pre-election year going back to 1950. The S&P 500, that average going back to 1950, is in blue. And what we see in red is what the S&P 500 has done so far this year, okay? So if you look at the blue line, historically, in pre-election years, the market starts off strong the first half of the year. From August through October, we kind of go nowhere. It's kind of choppy. A lot of ups and downs, but really making no progress at all. And then by the end of the year, the last quarter, November, December, things tend to strengthen. So now let's look at the red line. The year we're currently in, 2023 so far, started the year off strong. And guess what? Come August, kind of gone nowhere. And the last few days have felt pretty lousy in the markets, but it's really not that bad. We're following the trend. Again, if we weren't following the trend, then I think that should raise some red flags. But everything, according to history, so far this year looks normal. It looks okay. I'm not getting worked up over it. Again, if we continue to follow this path for a pre-election year, we expect the final 2 months probably to be pretty strong. So I like this chart a lot. I'm going to do another video that shows what the S&P 500 averages in an actual election year. Not quite there yet. We'll get there. Let's see how the next few months play out. I hope you guys found this interesting. Thank you so much for tuning in, and please stay tuned for more.